Hello and welcome back to It's Contrarian, your channel for videos on the stock market. We will go over these topics today in relation to our trade of the week, the month, that is the VIX related ETF and options. So the bullish S&P 500, should we be concerned? Bond volatility versus VIX, ISM prices paid versus inflation, bank failures and its impact, debt ceiling, why should we be concerned? Rumor, short ban for regional banking stocks, QQQ Future Projections, Trade of the Week Month Tracker. We'll start with bullish S&P 500. Should we be concerned? So here is the weekly S&P 500 chart. We see that in the beginning of the year, S&P 500 broke down from the descending pattern. Now it's moving in an ascending triangle pattern, and every time the market tries to go down, it comes up. MACD supports a bullish move on a weekly chart. Now let's take a look at the QQQ. So here as well, the weekly QQQ chart shows that the QQQ is moving up on an ascending triangle pattern. RSI is looking bullish from the short-term perspective. So should we be concerned? Let's take a look at the other data before we zero in on this strategy. Bond volatility as compared to the SPY volatility of VIX. Bond volatility is still high as shown in the charts, but we see a divergence here. VIX volatility is going down while bond volatility is going up. Last time it happened in 2008, where VIX caught up eventually. Generally, VIX shoots up beyond bond volatility before the market bottom. So we have a long way to go, but we are on the right track if we are positioned as per my recommendation. This time bond volatility is the highest and it's already down, which means another wave is pending. And it will be bigger, and that means VIX will see new highs soon. Let's wait till that. Subscribe and watch my videos, and I will let you know the exact time to get out of our positions and make our profits. Let's look at the ISM prices paid versus the inflation chart. ISM prices went under 40 but recovered to 50s. This means we are not hitting recession right away. ISM prices paid is a leading indicator for inflation, as you can see in this chart. We should see the inflation go up either this month or the next month's report. This means S&P 500 will go down and Fed will be forced to do a rate hike. This also eliminates the recession theme with which a few stocks and ETF acted in the past few months. Oil, commodities should be moving upwards. Again, this chart reconfirms that the VIX is going to shoot up very soon. Next, we look at the banking failures and its impact. Last week, FRC collapsed and JP Morgan took over FRC. This marks the three largest banks, regional banks, collapse in the last 2 months. Signature Bank, Silicon Valley Bank were the other two. Total value is about 500 plus billion as compared to the 307 billion of Washington Mutual in 2008. However, in terms of inflation and the value of SPY, bank collapse of 2023 are not as big as 2008. This is the reason why the markets are not significantly down at this point. However, this does not mean the collapse of the bank is over in 2023. We will have to wait and see how this unfolds, especially with the other macro market movers. Last Friday, we had a rumor that the markets priced in immediately. Rumor was that a JP Morgan analyst indicated that a sharp band will be made on some of the financial stocks. This immediately pulled PacWest Bancorp and Western Alliance Bancorp by over 50%, and overall KRE as well recovered. KRE is a regional banking ETF. They have not pulled back yet, and that means the rumor is still priced in at this point. Let's look at the similarity in 2008 when the sharp ban was initiated. The markets made the sharpest downturn, and this happens this time, the VIX will shoot up massively and we should be in good profits on our trade. Now let's take a look at the debt ceiling and why it matters this time. In 2011, a similar situation happened where markets tanked by about 17% and VIX went to 40s. So in the first 5 days, Treasury General account balance in May dropped by about 110 billion. That is from 316 billion to 208 billion. This is about 21.5 billion every day. This means we have about 5 to 10 days to exhaust the balance. Considering the banking crisis, a sharp ban is absolutely required to avoid further damage if a debt ceiling is not addressed immediately. Or we face a disaster situation very soon, though a solution will be arrived between Democrats and Republicans. We will definitely see huge movements in the stock market, and VIX will be shooting up because of the time crunch. This aligns well with our strategy to trade VIX related components. Here is a great chart for the QQQ all the way from 2008 till 2030. We are currently in the phase of return to normal. Perhaps there may be 10 to 15% upward move available. But beyond that, we are looking at a sharp downtrend that can wipe nearly 80% of our market value. Thanks to a number of factors: enormous debt at 31 trillion, Fed dovish policies helping inflation with slow and low interest rate hikes, uncontrolled housing policies, and more. I'll be sharing more videos on these items, and please follow the channel to keep updated with the analysis so that you can survive in style. Now let's take a look at the trade of the week month tracker. VIX is at the same level we purchased on 17th April 2023, with the highest return on 4th May at 25%. VXX is at 3.4% loss and with the highest return of about 8%. UVXY is at 6.3% loss with the highest return of 12.3%. UVIX is at 8.3% loss with the highest return of 16%. If you are still holding, yes, wait, and we have a great time ahead. And with this, we are at the end of our video. Thanks for watching, and if you have not hit that like and subscribe button, time to smash the same. I'll see you soon with my next video.